how to make a stock portfolio in Excel, Google Sheets, or any other spreadsheet software. This how-to can be followed along in either Google Sheets or in Excel. Really, any spreadsheet software will do fine. The formulas will be the same. The formatting and charting options should be very similar. I'll be using Google Sheets myself. I like Excel and I use it often, but particularly with some of my more intensive models, I like Excel. But in this case, however, I think the Google Sheets is a better option. Firstly, because of its Google Finance functionality, which is a formula that will automatically update certain fields, things like price, volume, PE ratio, earnings per share, etc., a lot of others. And Google Sheets is cloud-based, which would allow me to access this portfolio spreadsheet from anywhere. Now, Microsoft does have a cloud-based version of Office and Excel, but I don't really recommend it. I'm a Microsoft fan in general and a Excel fan in particular, but I thought Office 365 or whatever it is that they call it fell way short. I just didn't like it. But by all means, use whatever you're most comfortable with. And so if you're going to follow along in Google Sheets, you'll need a Google account. If you don't have one already, then there's a link in the post that you can follow that will take you to Google and walk you through how to set up a Google account. Once you have that account set up, then you're going to go to Google Drive and you'll select New, Google Sheets. See a picture of that here. And once you do that, blank spreadsheet, ready to go. So here's the finished product, but let's walk through the steps, how we got there. So first things first, you're going to enter your headers. We'll lay the foundation with that so we know what information we're either going to have to go get or create formulas for. In this example, I kept things pretty simple. The amount of information that you could compile from an investment's current or historical data is pretty much limitless. So wanted to keep things in this instance fairly simplistic, and obviously if you wanted to, you could always build upon this. This how-to, is meant to be a starting point, and so the pieces of information that I'm going to compile are the company, or in some cases it might be fund, the name, the ticker symbol, purchase date, purchase price, shares, purchase cost, current price, gross current value without dividend, total dividends received, net current value, which would include dividends, then a couple that measure gains and losses, total gains and loss in terms of dollars, in terms of percentage, and annualized gain and loss. So, like I've done here, you can enter these headers along row 5, and it would stretch from column B to column N. I like to leave a little space at the top as it is, but also I left room to put this in. This is a place right here where you would enter when the portfolio was updated. Okay, so that I also bolded the headers, as you can see. You can do that too, but with all the headers entered, then we can move on to some basic stock information. So this is all going to be information that you will know or have access to. Simple to get your hands on if you don't have access to it real easily. And what I did in my examples here is chose stocks at random. You may have more or fewer. That's fine. You're not going to have so many that you'll run out of space on your spreadsheet. If you have an online broker, you might need to use it to uncover some of this information, particularly the purchase date. But if you want an accurate calculation of the annualized gain and loss, then that is information that you're going to want to have. So here is where I typed all that information in. Okay, and so a little bit on the purchase dates. So in some cases, you might have different lots of stock. For instance, let's look at my first stock I have listed here. Actually, closed end fund, I think, but the symbol is ZF, and let's say rather than purchasing all 130 shares on May 4th of 2015, I purchased 100 shares on May 4th of 2014 and 30 shares on May 4th of 2015. Okay. Purchased, so have a total 130, but I purchased those in two separate transactions. And, in reality, if this is something you're going to run into a lot, you might want a little more sophisticated portfolio spreadsheet than this one. Like I said, this is kind of elementary, simplistic, but here's some ways you might work around it. You can either list the lots separately. So you could enter your lot of 100 here, and then on a separate line, your lot of 30. The problem with that might be if you're allocating dividends that you've received, which we'll get to a little later, you might run into an issue there, or you could just group all the lots together. But if you do that and you don't calculate a weighted average purchase date, which sounds weird, don't typically think of weighted averages when it comes to dates, but we'll also touch on that a little bit more later. Your gain and loss information is going to be wrong if you don't do that. Your annualized is in particular. So personally, I would separate the lots out if it were me, and then just lump all the dividend information in with one of the lots. That's probably the simplest way to go about it. But, again, do whatever works best for you. So, okay, so we've got our basic information here: name, symbol, purchase date, purchase price, and the number of shares. Okay, now we'll get into some formulas. So we'll start off simple here. We're calculating purchase cost, and purchase cost is simply equal to purchase price times the number of shares, of course. For those of you that are brand new to spreadsheets, I'll kind of explain some of this, some stuff that'll be simplistic and maybe too simplistic for people who do have experience with spreadsheets. But, like I said, this is a kind of a beginner's tutorial. So I'm trying to not scare anyone off here. So if you aren't new, or familiar with, if you are familiar with spreadsheets, then, you can just hit the L button, jump ahead a couple of seconds if some of the stuff gets a little too elementary for you. But so if you look up here in formula bar, okay, every formula is going to begin with an equal sign, okay, and then you're just going to enter equals, and we're doing purchase price for this case for ZF, which would be E6 times F6. The asterisk is times, of course. So if you enter that here, and then you'll get your result. It would be this. So you see the formula is still up there in the formula bar, but this is what 1531 times 130 is equal to 1,990.30 cents. In this case, that wouldn't include commission, of course. We're just looking for the purchase cost for the stock itself. But that's all there is to it. So equals E6 times F6. So, rather than typing that down in every single cell below that for every other stock, you can simply copy the formula now. So you can either do Control C and highlight all those cells, Control V, or you can use the little square in the lower right-hand corner here and drag it down like that. And you can see that spreadsheet, whether it's Sheets or Excel, smart enough to know that in this case, you wanted to do the same thing for each line. So right here, see, we're taking E13 times F13. And that's giving us our purchase cost for WCG. Now we'll get a little more into the Google Finance function that I mentioned earlier, and this automates the current price and therefore the gross current value in Google Sheets. Like I said, that's one of the reasons the Google Finance function that I opted to use Google Sheets. I know that Excel used to have like an MSN Money functionality to it where you could do something similar, but I don't know if they still have that. So the Google Finance function, you can see it up here in the formula bar, and what it basically does is it goes to Google Finance, connects to it with this formula, and populates Google Sheets with whatever information you tell it that you want. So, for instance, here in H6, we typed equals Google Finance, then open parentheses. Okay, we specified our ticker, and in this case, it says C6, which isn't the real ticker, but see our symbol is in C6. So we're telling it to refer to C6 to go get that symbol. The next thing we specified is that we wanted price. That's the attribute that we want. Okay, and you can see there's a bunch of other stuff you can enter here, but don't worry about that right now. Just enter in H6 equals Google Finance, open parentheses, refer to the cell, in this case is C6, as your symbol, and then enter price with parentheses around it. Okay. What's nice about this is with this Google Finance function, you don't have to worry about looking up price and other basic information. Like I said earlier, and manually typing it into Google Sheets, you don't have to go to Yahoo Finance or Google Finance or wherever it might be that you get your price information and, come in every day and type in a current price. Okay. Google Finance will just go get it for you. So it's automated and updated automatically. So if we enter that, let me make that visible here. And then we copy it down. Give it a second. There it goes. Current price for every single one of these symbols. Now we can calculate the gross current value. Again, why are we calling it gross current value? That's because it's not including any dividend information. Okay, so gross current value is simply, if we look up here, it says equals F6 times H6. What that means is, what's an F6? Number of shares. H6 is the current price we got from the Google Finance function. So we enter that. And there we go. 130 shares times 1007, the current price. We got a gross current value of $1,309.10. Rather than retyping the formula, we will just copy it down. And there we go. Gross current value for every one of the stocks in our portfolio. Dividends. Now, dividends are obviously an important part of the return that you receive from a stock. So we want to include that if we want to get accurate information about what our gains and losses have been for a particular stock. So unfortunately, right now, there's no way that I know of anyways to automatically import dividend data for these stocks, like through a Google Finance function. That would definitely be nice, but one might exist. I'm just not aware of it. So, the Google Finance function can import the yield percentage for any given stock, but that's not really what we're looking for. The yield is going to be over the past year. You might have held this stock for more than a year, okay, or less. And so it's simply using that yield attribute in the Google Finance function isn't going to do anything for us. Unfortunately, this is something that's just going to have to be entered manually, which I already did here for the time periods that I held these particular, hypothetically held these particular stocks. And like I said, you'll notice up here in the formula bar, it's just amounts entered. There's no formula, no equals anything. It's just the amounts. So if we go over here to the post, If you own your shares through an online brokerage, then you probably have the ability to access dividend payment history for the stocks you own. So your screen, I use TD Ameritrade, and showed a screenshot here. And I would imagine if you use a different broker, you'll have something similar where you can put in your date range, specify you want to look at dividends, you enter your symbol, and it'll give it all to you. So it's really just a matter of going into your brokerage and retrieving that information and then totaling the amounts up. What you're looking for is the total amount of dividends that you've received since you've owned this particular stock. If for whatever reason you can't get this information easily from your brokerage, then you'll have to do a little homework. My suggestion would be to use the NASDAQ dividend history page, and it will tell you the amount of dividend paid for each share of a particular stock, and then you'll have to multiply that by the number of shares you have to get full amount of dividends that you received. Like I said, it is annoying that that can't be more of an automated sort of thing, but that's what we're working with. You can see here, the NASDAQ site will show dividend history for years and years in the past, maybe even every dividend it's ever paid. Once you total those amounts, like I said, enter them into the total dividends received column for each respective stock. Make sure, for the sake of accuracy, you're only including dividends that were actually paid to you, not dividends from before you owned the stock. So be mindful of when you purchased it and, like I said, how much you received. A lot of trouble, but dividends are an important part of returns, so we definitely want to include them. And we'll move on to net current value, which will include all returns, so what you've made through capital gains and losses, and including the dividends that you've received. And the formula here is just gross current value plus total dividends received. So you can see the formula bar here, we've got I6 plus J6, and it'll give us the amount, in this case, $1,984.45. We copy that down, do it for the rest of the stocks, and there we go. Net current value. Now we want to know, we know what the stocks are worth. We want to know, how does that relate to what we paid for it? So we're obviously then going to compare what it's worth now, the value we've received now versus what we paid for it. So total gain and loss dollars is going to be net current value minus purchase cost. You can see here, so in cell L6, you'll enter K6 minus G6, net current value minus what you paid for it. Okay. In this case, paid $19.90.30, but we bought at $15.31 for this particular stock. It's gone down about 50% in value to $10.07, but we've received a decent amount of dividends since then, $675. So that's offset some of the loss in share value. Our total gain and loss then is $5.85, more or less. We broke even thanks to dividends in this case. So enter that formula in L6, like I said, copy it down for the rest of your stocks, and there's your total gain and loss in dollars for each stock in your portfolio. You can see here, this guy, again, I just chose these stocks at random for the purpose of an example, but he's done pretty well. Purchase price was $74.73, current price $285.69. So in that case, I wish this wasn't hypothetical. I wish I had really bought that at $74.73, but I did not. Okay, So we know the dollar amount of gain and loss. Now we want to translate that into a percentage, to be able to compare stocks between each other. Okay, so getting the total gain and loss in percentage is not too terribly hard. It's just a matter of taking total gain and loss and dividing it by the purchase cost. Okay, so in this case, cell M6, you can enter equals L6 divided by G6. Total gain and loss dollars divided by purchase cost. And there it'll translate into a percentage. Now, if your formatting's a little different, you're getting numbers with lots of decimal points, or in this case in particular, it's not showing up as a percentage per se. It's like point 003, 1, 2, 3, 4, 5, something like that. A big old weird looking number. Don't worry, we'll talk about formatting here in a moment. So, like I said, this formula compares your gain and loss in dollars to what you paid for the shares of the stock you own, and gives you the percentage gain and loss. That's good information to have, but it's not complete. Okay, the total gain and loss, because what's a good total gain and loss? All right, there's no one answer for that. A 5% gain is great, total gain and loss, if you've only held the stock for 1 day or even 1 week. Okay. On the other hand, a 50% gain isn't so good if you've owned the stock for 20 years. So, like I said, this information is incomplete, and that's why we have to include the one last column, the annualized gain and loss. Okay. This formula is a little more intensive, and there's really no way around it, but it's how we translate this amount into what your gain and loss has been year over year. Okay. So the formula is up here, and it's also on the post. Here's that formula. Just copy and paste it if you want off of the post. There's no shame in doing that, or you can type it out, but we won't, getting into why this formula is what it is a little more in depth than I probably want to do, but just to kind of give you an idea. The first part compares what you paid versus the net current value, compares the net current value to what you paid, the purchase cost, and really the rest just determines the amount of time that's passed since you purchased that stock. Okay, because if we go back, look, our purchase dates are all around the board here. Some we've held for 5 years, some for less than 1 year. I mean, you can go ahead, your portfolio updated. You'll need it for this particular formula. Make sure you've got today's date in there. And this isn't today's date. So actually, I'll leave that at 5/3. That's when I created the post, and I'll show you how it'll change when I update that date. So, yeah, again, this formula, don't let it scare you off. Copy and paste it if you want, or type it out. And should give you something like that. So since we've held, let me actually just copy these down. See, so this the well performing stock here, we've got a total gain and loss of 281%, which is awesome. But since I bought that in 2014, okay, my hypothetical stock here, that only translates into a annualized gain of 32.2. Still very good. See, this is how it puts things into perspective. This stock has a higher annualized gain, though a lower total gain and loss. Okay, but because I purchased it roughly 15 months ago and earned a 69% return. Nice, right? One thing to point out real quick, the critical thing you want to do is make sure you've got these dollar signs in the formula here. And what that does is that refers to this portfolio updated date. Just that we'll lock that in so it's always referring to cell C2 when you copy it down and doesn't try to refer to something that isn't there. So make sure those dollar signs are in there. There we go. Got all our fields filled out, but we're not quite done yet. What about we know this information for each individual stock, but what about the portfolio as a whole? So, you could quit here and would still have a functioning worksheet, of course, but you probably want to know how your portfolio as a whole is doing. Now, let me swing back real quick. Like I said, let's look. I wanted to point out what the change in date will do. So, for instance, this particular stock here, which one is this? CDNS, has an annualized gain and loss 53.6%. Now, that was as of May 3rd. Okay, today is actually June 5th. So, I update that. See, now that more time's passed, the annualized gain and loss was lowered. Another little over a month had passed since I changed that updated date. So it's important you keep that updated also to give you accurate information here. For most of our fields, except for current price, we can analyze the portfolio in whole. Okay. That way you can compare individual stocks against each other and against how the overall portfolio is doing. For most fields, it's pretty easy. It's just a matter of totaling the amounts for each individual stock. Others will use the same formula that we use down here for each individual stock. The last one that's a little tricky is purchase date. So we need one purchase date for the entire portfolio. That goes back to that weighted average purchase date that I mentioned. And like I said, that'll take a little creativity, but can be done. Okay, so first of all, the fields that can be summarized with the sum: purchase cost, gross current value, total dividends received, net current value. Those, all we're going to do is simply sum those up. So if you go above here, in this case, went on row 4, right above my headers. Okay, so purchase cost, make that visible. All we did here is equals sum, and then you'll see that I did G6 through the G50. Why not G15? Okay, because that's where my list ends. Well, I did it way above and beyond, so that way I could add stocks later on, and that would automatically update. Okay, so there's no harm in doing that. There's nothing in these cells down here. It's going to total, so that's fine. It just gives you room to expand your stock portfolio spreadsheet in the future. So there's our total for purchase cost. Total amount we've spent on these stocks. Like I said, just using the sum function in this case. So it's equal sum, open parentheses, and then the cells you want to sum. Notice there's a little colon in there that just specifies do G6 through G50. Okay. The other ones we want to use that sum function on are gross current value, total dividends received, and net current value. Okay, easy enough. See, they all just use that sum function. Okay, so you can, again, all you have to do here is copy, Control C, copy it, and just paste it if you want. It'll know. Okay, to do the same thing for column I that you wanted for column G. All right. Now we got a couple of fields that are summarized with an equation. That's these, of course. In this case, the total gain and loss dollars, total gain and loss percentage, and annualized gain and loss fields. They're going to use the same equations to calculate for the whole portfolio as they did for the individual stocks. So, again, all you need to do, in this case, total gain and loss of dollars was net current value minus purchase cost. So in this case, K4 minus G4. All right, now you can do the same thing here too. If you want to just copy and paste that up there, you can. See, it does the same thing. Okay, total gain and loss percentage was total gain and loss dollars divided by purchase cost. Okay, L equals L4 divided by G4. Okay, then we had our complicated annualized gain and loss formula. The same thing, refers to what you paid for it versus what it's worth now, and then does the math for the year. And there we go. Now, if you copy this from down here and paste it up there, you're probably going to get an error. And why is that? Because remember, this formula refers to purchase date, and it's looking for a single purchase date for the entire portfolio. You won't have one yet, so let's put one in there. Okay, so this is one last formula, and it's another slightly complicated one. You might be wondering, how can an annualized gain and loss be calculated for an entire portfolio when there's no single purchase date for a portfolio as a whole? And how the hell do you go about settling on one purchase date for a bunch of different stocks that were purchased, again, over the course of years? We're going to have to do a weighted average purchase date, and how do we weight it? We weight it with the cost. If you don't understand completely how this works, that's fine. Just know that it does. That I'm going to use equals sum product. I'm going to open parentheses, put in D6 through D50. Remember, we're going down to row 50 because we want room to expand our stock portfolio spreadsheet if we need to. Doing a comma, then G6 through G50, close the parentheses, and then we're dividing that by G4. When you hit enter here, it might be that you get a big number that doesn't even look like a date. So here's, show this the result here, 6/19/16. That's my weighted average purchase date for all these stocks. Okay. What you might get is something that looks like this, something in the 40,000s of the decimal, and you're like, what is that? And though we haven't really touched on formatting yet, this one you can go up here, the little 1, 2, 3 drop down, change it to date, and there you go. So once you get that in there, if you got an error before, you should have an annualized gain and loss for your portfolio in cell N4 now. Because, see, it was referring to cell D4, which is the weighted average purchase date. And, if it wasn't there, then the formula couldn't do its job. Now it should be there and should have all this information. So it might be, if you're following along, that your spreadsheet looks a little junky. And the reason that might be is because of the formatting. I had already formatted this to kind of save you guys from having to watch that, but you can definitely spruce things up a little bit and make the information more readable. And it's all a matter of preference. You can leave it the way it is. You can change as much as you want. Formatting is, definitely personal preference. walk you through a couple of things I like to do in terms of formatting. You can copy what you like, disregard what you don't like, and feel free to explore on your own. Most of the formatting options are going to be in the menu up here at the top, either in the little icons or in some cases the drop down menus. Now, definitely make sure your dates are formatted as dates. You know, some 42,000, whatever number isn't going to mean anything probably. So I would definitely do that, and that's here, this little drop down, go down to date, select that when you're selecting the cell. Another thing that I like to do personally is and let me go over to the portfolio here, the finished product, and kind of show you. I like to color the cells that have formulas in them, so that way I know not to change them. I know that I only update the information in white. It's just kind of a visual reminder for me not to type in them. When it comes to formatting the numerical data, you can choose to show it, if it's showing too many decimals, you can change that here. See how I can increase, decrease the amount of decimals. In my case, I want to see the cents. Another big one is the gain and loss percentage amounts here, total and annualized, like them formatted as a percent. So you can either click percent there, and the same thing, you can increase decimals or decrease them, and or you can select the percent from the drop down menu, 1, 2, 3, either way. So, it's as much detail as you like. Personally, I like 1 decimal for my percentages. And like I mentioned earlier, I always like to bold my headers though too. So again, formatting is a matter of preference. There's no right or wrong way to do it. Play around with it, make it look how you want. And if you ever think you've done something that really screwed things up, you can select main menu, format, select this clear formatting, or if you hit the control backslash, that will also do it too. If you highlight the cells you think are messed up, it'll just wipe out any formatting changes you've done and take it back to where you can restart. So the only thing left to touch on then is the charts. Okay, and charts give you the ability to better understand your portfolio and the returns. You can chart anything on the spreadsheets here. Chart your purchase dates, chart your total dividends received, chart whatever. You can chart the symbols if you want. Won't mean much, but you can do it. In this one, in my example, I did 2 things for the sake of simplicity. Charted annualized gain and loss, charted net current value. So this compares the annualized gain and loss among all my stocks. This shows the total current value, how they make up the whole. Okay, you can see the one there is 66% of the value, the WCG, one I wish I had bought. It's pretty quick and easy to do in Google Sheets. Doing cell in Excel is also easy. In Excel, you're going to go to Insert, the Insert tab, and then Charts. Okay, they're going to look a little different between the 2 pieces of software, but again, it'll be more or less the same. To make the first chart, I want to highlight all my symbols here, and not the header, okay, just the symbols, not where it says symbol, just the individual symbols. And then you want to hold down Control, and what Control does is let you select another set of cells. And I want the annualized, come over here and gain and loss percentage. There. Okay. Then in the Insert menu, Chart. Okay, so see, it's more or less the same chart I have over there. Move the chart wherever you want it. Just click on it and drag it. And one thing you'll notice here under customize, then I gave mine from this chart and access titles here. I just gave it a title, and I think I called it annualized returns or something like that. See, boom. So that's all there is to that one. It knew right away, had it the format I wanted it, good to go. Knew I wanted a column chart like this. As far as my other chart, the net current value. Now it's a pie chart, of course, not a column chart. So in this case, what might happen if you select symbols and then net current value, just go over here and do it. So again, we select all of our symbols, hold down Control, symbols, net current value. And then we do insert chart. See, this time, we wait another long second. Okay, see, this time it wants to give me another column chart. Okay, not what we want. Easy enough to change. So you go over here, the chart editor will pop up. Say, nope, we want a pie chart. There it is. Look familiar? Looks exactly like the one I have down here in the corner. Same thing as we did before. Let's see. Did I put a... Yeah, here it is, chart access and titles. Okay, we just say net current value. Put the title in there, and boom, there we go. All done. So that is how to create a simple zoom out here, get a little better look at it. Simple stock portfolio spreadsheet in Google Sheets or Excel. The nice thing about spreadsheets are they allow you to analyze your portfolio and returns in any way imaginable. Okay, the Google Finance function in Sheets in particular is nice because it automates the updates for a lot of frequently referenced information about stocks and mutual funds. I tried to explain everything I used to make this in pretty good detail, but is there anything that you got hung up on or didn't quite understand? If so, let me know down in the comments. And I'll link, of course, to the post so you can reference it down in the description. And is there any information that if you were making your stock portfolio spreadsheet you would have included that I didn't? Anything not included that you wouldn't have? Also let me know down in the comments. Appreciate you guys watching. Take care.